Yo, what's up guys? It's your boy Looney. We've got a major headline coming up, a possible government shutdown set to kick in at midnight on October 1st. Let's break down what that actually means for the market, look at how past shutdowns played out, and go over what I'm seeing in the current market conditions. But before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership. It's $8 a month, and that gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links that are in the description. But first off, what is a shutdown? Basically, if Congress can't agree on funding, a lot of government operations pause. Federal workers get furloughed, agencies slow down, and overall uncertainty spikes. And we all know that markets hate uncertainty. Now, let's talk about the history and what has actually happened in the past, because it's not as bad as you would think. If we look back at previous shutdowns, the one in late 2018 into early 2019 was actually the longest in US history. And this one lasted around 35 days. With that, the S&P 500 did drop at the start, but actually recovered while the shutdown was still happening. In earlier shutdowns, markets might dip short term, but they've almost always bounced back quickly once the government reopened. So historically, shutdowns haven't caused lasting damage, but they do spark volatility. Now, let me read some numbers out to clarify what the historical data is. Now, during that 35-day period in 2018 to 2019, the S&P actually gained 13% during that period. So although I said it had initial volatility to the downside, in that period, it was actually up by 13% at the end of it. In the 12 months following that shutdown, the S&P rose 26%. So we have to remember different market conditions back then, but it is something to note. Now, if we look at across all 21 shutdowns dating back to 1976, the S&P was actually up 55% of the time, with an average return during the shutdown of about 0.3%. So you could see that it's pretty net even with the shutdown. So is that good? Is that bad? You can actually profit in both directions, which is what I'm going to try to do, is be prepared to any sort of direction. You can see here, it is pretty uncertain on where the market goes. So the median drop ahead of shutdowns was around 10.2%. And during the shutdowns themselves, the median move was around -2%. Now, in the 12 months post-shutdown, the S&P median gain was actually 18.9%. So long-term shutdowns can actually spark bullish momentum. And we are in a bull market, and there's a lot of bullish momentum. So we do have to note that even long shutdowns like 2013 and 2018 didn't move the overall market in a lasting way. So in the 2018 shutdown, the month leading into it, the US equities actually fell over 15% in some cases. So you have to keep that into account as well. We are in a very bullish momentum, and that's what I want to do. Let's talk about what is going on right now. And the market is already in an interesting spot. We did just recently see rate cuts recently by Fed Powell, and he also reminded us that the market or the valuations are fairly highly valued, which tells us that the market might already be a little too stretched. But we all kind of knew that. But if we add in the shutdown headline, there is a chance for a recipe for short-term panic selling, or at the very least, choppy sideways trading. What's even more important is the sentiment, because that's what drives the market as well. If investors think that the shutdown drags on, like it's going to last months rather than a few weeks, it could actually pressure consumer confidence and delay economic data reports. We're supposed to get some job data this Friday, and if the government shuts down, we probably won't get that data report. And this is the very stuff that traders rely on to price the market. So I would expect more uncertainty in the coming days. So I wouldn't be making major moves, but I'm going to go over what I'm doing. But let's first look at some big names or big movements in, I guess, my portfolio or just the overall market. And recently, ASTS just shot up in after hours market. I actually bought a share earlier today, and I released this to my premium Discord. But yeah, I bought this one, and for some reason it's up. I don't know the recent news, but I do want to look at Robinhood because this stock has been an absolute tear ever since the announcement of the S&P 500. And even before that, it's been up almost 500% in the past year. And this stock just continues to climb, and it's just been on an overall tear, keeps building strength. They just came out with some data with the prediction markets, and it's overall just beating all expectations. Now, this is a very high valuation. I think it's a great stock, and I am invested into it. I'm doing $2 a day, but you can see I'm not being aggressive with these purchases. I'm being very safe and cautious, but I am trying to build a hood position. If we do see some sort of bear market and the tide kind of pulls back, this stock is a very volatile stock, so it might give back a lot of these gains. Maybe not all of them, but definitely it is volatile. And plus, we haven't seen any sort of volatility in this stock. We could see past 3 months, it's just been on an absolute tear. Past year, very little drawbacks. If there were, it was very short-lived. And we could see here in the April, kind of everything was affected then. So I'm going to wait on Robinhood to make major moves, but it is in my portfolio, only takes about 0.9%. And if I was to start out, this is a good stock. I would do what I'm doing now, this $2 and something very small, and slowly build this position over time. Again, ASTS for some reason is absolutely climbing in the after hours. I'm not entirely sure why, but very interesting movement from this stock. Now, another stock I want to look at is SoFi. This one has been beaten down. It keeps selling off, and it's sold off the past week down 11%. But I think that might be an overall good thing. But it's partially due to, it could actually have to do with the shutdown and people have uncertainty with their credit cards and just paying it. But overall, you do need some sort of pullback. Stocks can't go straight up unless you are a Robinhood holder. Then your stock just does kind of go straight up. But you could actually profit to the downside. And I do have some covered calls. Today, I'm actually up 271, and I sold some credit spreads as well in case we see this turnaround. And looks like I have a lot of different trades going on. But in total, I have about $1,200 in cash on SoFi. So not a major amount. It's not major, but it is something of note that $1,200 is mostly bullish, but the 400 shares are not bearish, but it's covered calls. So I'm kind of able to profit in any sort of market direction. And my 23 SoFi calls are actually up $500 today. So I'll probably close this one out for a profit if SoFi continues to sell off. And I'm staying patient because overall, this is nothing new to me. SoFi and other stocks are very volatile. I'm used to this volatility. Plus, the stock, similar to SoFi, has run up quite a bit. Maybe not 500%, but half that, 230%, which is still insane growth in just 1 year. So a pullback is due, and especially with this uncertainty, I'm totally fine with that. But overall in the day, I am down 1% or 743, whereas my options are actually up $500. So I was kind of cushioned with the covered calls. But overall, again, I'm just staying patient. Shutdowns in the past have been more of a short-term headline risk than a long-term market breaker. I do have cash on the sideline. This buying power is partially margin, but I do have that cash ready in case we do see more or an overreaction to things. And I'll just keep running my option strategies to collect those premium, selling credit spreads, selling cash secured puts. I have some on Webull and Zeta and Archer that I just have open, and I'll probably close these as we get closer to their expiration. So I want to see where the market goes, and I'll just let the market kind of sort itself out. But to sum everything up, shutdown risk hits October 1st or tonight at midnight if no deal is made. Past shutdowns have caused short-term pain, but markets have bounced back long term. So right now, with high valuations and mixed sentiment, I would expect some volatility. And lastly, we have Robinhood absolutely killing it, SoFi pulling back, unfortunately. And the key is to not panic. So you shouldn't be panic selling SoFi and you shouldn't be FOMO buying into Hood. Volatility can actually create opportunity if you stay disciplined. Until next time, peace.